Ready to unravel the secrets behind Warren Buffett's investment success? Discover now how this financial guru tackles bear markets, high inflation, and the challenges of high interest rates. Learn dynamic strategies to enhance your earning power, choose resilient businesses, and explore unique opportunities during these challenging scenarios. All while deciphering the mind of the legendary investor. Don't miss out. Watch until the end, subscribe to the channel, and unravel Warren Buffett's investment strategy.
5. Warren Buffett emphasizes the importance of having the temperament to invest when stocks are being sold at low prices, rather than being influenced by market fluctuations. Investing requires more than just knowledge, it requires the right temperament. Warren Buffett, a renowned investor, highlights the importance of acting when stocks are being sold at low prices. He points out that it doesn't take a high IQ to recognize when stocks are cheap, but rather a willingness to act. Buffett, the CEO of Berkshire Hathaway, shares his wisdom accumulated over decades of experience in the financial markets. Over the years, Buffett has achieved an average annual return of 20.1%, consistently outperforming the S&P 500. His approach underscores the importance of being a long-term investor, resisting the temptation to be swayed by short-term market fluctuations. He emphasizes that in a bear market, declines in stock prices should be seen as opportunities to buy at lower prices. This contrarian mindset highlights the importance of staying calm and rational in the face of emotions that may arise during volatile periods. Facing the challenge of high inflation, Buffett offers additional insights. He suggests that, beyond simply investing, it is crucial to improve our own earning power. In an inflationary environment, investing in companies with pricing power and competitive advantages becomes fundamental. Companies with the ability to adjust prices without losing market share are seen as solid investments amid inflation. Buffett emphasizes that throughout his journey, rising prices did not hinder the success of well-informed and strategic investors. Finally, the challenge of rising interest rates is also addressed by Buffett. He notes that the increase in interest rates impacts both businesses and stock markets. In this scenario, the recommended strategy is to focus on acquiring great businesses at attractive prices during periods of high interest rates. This approach suggests that while monetary policy is beyond our control, we can influence our investments by carefully choosing when and where to invest. In summary, Buffett's wisdom highlights the importance of temperament, long-term vision, and adaptable strategies to navigate the challenges of the investment world.
4. Buffett, the CEO of Berkshire Hathaway, has achieved an average annual return of 20.1% since 1965, surpassing the S&P 500, which had an average of 10.5% in the same period. My journey in the world of investments has taught me a valuable lesson: the importance of cultivating the right temperament. As the CEO of Berkshire Hathaway, I have witnessed the highs and lows of the market, consolidating an impressive average annual return of 20.1% since 1965. This performance consistently outperformed the S&P 500, which stood at 10.5% in the same period. This trajectory highlights not only the need for knowledge but also the importance of acting wisely when stocks are trading at affordable prices. Investing is not just about numbers, it's a matter of mindset. In my years of experience, I've realized that a high IQ is not necessary to recognize when stocks are cheap. The real challenge is to have the necessary willingness to act on the opportunities the market presents. Resisting short-term fluctuations and having the ability to see the long-term are crucial for lasting success in the world of investments. Beyond the long-term perspective, I've faced other significant challenges, such as high inflation. During inflationary periods, enhancing our own earning power becomes crucial. Investing in companies with pricing power and competitive advantages provides an additional layer of financial security. Companies capable of adjusting prices without losing market share stand out as solid investments, resisting the adverse effects of inflation. Another obstacle I've faced is the impact of rising interest rates on businesses and stock markets. The dynamics of these rates directly affect capital accessibility, influencing the performance of companies. In this challenging scenario, I emphasize the importance of focusing on the strategic acquisition of excellent businesses at attractive prices during periods of high interest rates. This proactive approach allows investors to maximize their potential returns, even in the face of economic fluctuations. In summary, my journey in the investment universe has taught me that success requires more than just technical knowledge. It's essential to develop a resilient mindset, adopt a long-term approach, and be prepared to face the specific challenges of each economic period. Investing is a dynamic and continuous journey, and each challenge overcome contributes to the growth and improvement as an investor.
3. During a bear market, Buffett advises investors to view market declines as opportunities to buy at lower prices, highlighting the emotional aspect of investing. In my journey in the world of investments, I've learned valuable lessons on how to face the challenges of a bear market. During periods of decline, it is crucial to view market downturns as strategic opportunities to acquire assets at more affordable prices. I advise investors to resist the emotional temptation to panic in the face of fluctuations and, instead, cultivate a long-term vision. The contrarian mindset proves crucial in these moments. Instead of succumbing to general fear, it's essential to understand that, as long-term investors, market lows represent a favorable scenario to acquire assets at advantageous prices. Emotional resilience becomes an ally in this context, allowing us to see beyond short-term fluctuations and focus on the opportunities on the horizon. It's important to note that, while the instinctive reaction to market declines is often negative, it is precisely in these moments that true wealth-building opportunities lie. Investors who can remain calm, analyze conditions rationally, and act strategically are more likely to reap the benefits when the market recovers. In short, facing a bear market requires not only technical knowledge but also a psychologically resilient approach. By viewing declines as strategic acquisition opportunities, investors can not only overcome emotional challenges but also position themselves more solidly for the future growth of their portfolios.
2. Faced with high inflation, Buffett suggests improving one's own earning power and investing in businesses with pricing power and competitive advantages capable of resisting inflationary pressures. My experience in the world of investments has taught me valuable strategies to face challenges, and in the face of the threat of high inflation, I advise taking proactive measures. Instead of just investing, I suggest an approach that includes enhancing one's own earning power. In an inflationary scenario, it becomes crucial to seek ways of personal appreciation, whether through additional skills or the development of competencies that can boost income. In addition to personal improvement, I highlight the importance of investing in businesses that have pricing power and competitive advantages. Companies capable of adjusting prices without losing market share have a natural resistance to inflationary pressures. By focusing on businesses with this capacity, investors can seek additional protection against the negative effects that inflation can have on assets. Detailed analysis of companies becomes crucial in this context. Identifying those with a sustainable competitive advantage, such as strong brands, patents, or operational efficiency, provides a solid foundation for facing inflationary challenges. This strategic approach not only protects the invested capital but can also generate robust returns even in times of high inflation. In summary, the response to high inflation goes beyond the simple act of investing. It involves a more comprehensive approach that includes continuous improvement of personal skills and the careful selection of assets. Adopting this proactive mindset not only strengthens the investor's position in times of inflation but also contributes to a more resilient portfolio prepared to face the challenges of the economic landscape.
1. The increase in interest rates poses a challenge, affecting both businesses and stock markets. Buffett advises long-term investors to focus on acquiring great businesses at attractive prices during periods of high interest rates. In my journey in the world of investments, I faced the significant challenge posed by the increase in interest rates, which directly impacts businesses and stock markets. The dynamics of interest rates influence capital accessibility, affecting the performance of companies. In the midst of this challenging scenario, Buffett's strategic advice emerges. Long-term investors should direct their focus to acquiring excellent businesses at attractive prices during periods of high interest rates. Buffett's recommended strategy goes beyond simply reacting to the increase in rates. He emphasizes the importance of playing the game smartly, focusing on specific opportunities. Instead of seeing high rates as a barrier, it is possible to view them as a window of opportunity for strategic acquisitions. During these periods, many investors choose to withdraw from the market, while the suggested approach is to carefully look for great businesses that may be undervalued. Buffett's advice highlights the need to act based on careful analysis and the thoughtful selection of assets. Instead of being influenced by the volatility of interest rates, long-term investors can strategically position themselves, seeking opportunities that others may overlook. The proactive approach in this context not only mitigates the risks associated with high interest rates, but also offers the possibility of achieving substantial returns. In summary, facing the challenge of rising interest rates requires a strategic mindset. Investors can benefit by focusing on acquiring solid assets at attractive prices during these challenging periods. By following this advice, it is possible to turn an adverse scenario into an opportunity to strengthen and expand a long-term investment portfolio.
And so we conclude our journey unraveling the valuable insights of Warren Buffett on investments. If this dive into the dynamic strategies of the financial guru has inspired you, don't forget to leave your like and share your thoughts in the comments below. Oh, and if you haven't subscribed yet, now is the time. Hit the subscribe button, activate the bell for notifications, and become part of the community seeking financial prosperity. Curious to learn more about Buffett's tactics? Let us know in the comments. Together, we will continue exploring the fascinating universe of investments.